Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friends Sam Clement and Courtney Trust. How are y'all doing today?
Good. How are you?
Listen, I'm doing fantastic. I'm doing even better. Taking a look at the stock market and how much it's rallying this month here, October 2021, compared to it falling apart in September last month. And so I'm feeling good about things, but it also kind of begs the question, with the market going up as much as it has over the last several years, stocks clearly have to be far more important to the average American than they were previously.
Well, I think you're spot on. I think it's almost inarguable that stocks are more important now. I think the two most important stats that I've seen about that are the percentage of household net worth that are in the stock market is now back to an all-time high, new all-time high, and then the percentage of stocks that are owned by the wealthiest Americans. I mean, it's 89% of all U.S. stocks are owned by the top 10%. So clearly it's important to building wealth and just important to everyone in this country as a whole. I mean, you hear it too, even politicians now clamor about the stock market a lot more than I feel like they used to, and that's just anecdotal.
Yeah. And I guess trying to figure out, like, why do people care more? Are they investing in small accounts with their own funds, or is it kind of driven through benefit plans through employers and people having, 401k plans that are invested in the market?
Well, listen, I'm a little bit older than you all.
Just a little bit.
Well, a lot older than Sam.
Yes.
Just a little bit older than you, Courtney.
Right.
But even in my career, a lot has changed with the stock market. When I entered into the industry in 1991, people were still buying physical certificates, and you had to go to a stockbroker. There wasn't the internet where you could get online and buy stocks. And heck, certainly weren't smartphones where you can use an app to do it. So it was far more difficult, and things were a little bit less liquid than they are. So back then, we all knew about the stock market. I mean, it still had ticker tape and all that stuff. We still talked about it, but I don't think it was as available to the average American as it is now. That's my estimation. Like Sam, I mean, you're a pretty young guy. You really probably don't remember a time where there wasn't a discount brokerage firm or there wasn't some place where you could go online and buy stocks cheaply and not have to go through a, quote, stockbroker that was going to charge a commission.
Yeah, but even just in the last couple of years, when I turned 16 and got my first job, I wanted to put some money in the stock market. I'd grown up kind of around the market and wanted to mess around with it a little bit. But
you see, you're just wired differently. When I was 16 and got some money, I was trying to figure out which convenience store would sell beer to me, all that type of stuff.
That's a part of it, but I wanted to put some of it into the stock market. I've been around it, and I remember almost like having the fear of opening this account. Like, it wasn't as easy as it is nowadays. And nowadays you have people as young as 12 years old buying stocks, and you have apps that shoot out confetti on the screen when you buy stocks, and it's just this complete gamification of it, and it's made generations now. It's become just such a norm to trade, to invest in stocks, and it's become big in social media and just people talking about it. And you're right that over the last couple decades, but even over the last couple years, I think you've seen just this complete expansion of access to the stock market.
I agree. I remember back when people had to use dial-up to get on the internet with AOL.com, and you could create kind of these not false, but where you could track certain stocks. And I remember tracking like Disney and certain things, and it was always so scary to think that you would actually put money into something and you might not get it back. It was different than a bank account. I think I was probably older than you were, Sam, when I was following stocks. But I guess, kind of going back, I know now I care a lot more because my retirement is tied up in the stock market. And so I'm watching that and making sure, okay, whether you put it in, an age-based fund or a retirement date fund, what do you think is enticing people? Is it just the coolness aspect? When you talk about the confetti, I mean, is it just a cool thing? Or do you think that people are really wanting to understand because a substantial part of their future wealth is tied up in it?
Well, I think that is kind of a generational thing. I think you're starting to see newer generations and younger Americans now expect to be more reliant on the stock market, and it's becoming a bigger portion of their overall net worth. And that goes back to that stat of the average household's net worth being tied up in the stock market. I think you mentioned it, part of it being with the retirement accounts that you're seeing, and how there's tons of 401ks out there now. It's a lot more common than it used to be back when there was pension and defined benefit plans. Now you're seeing defined contribution, these 401k plans. A lot of Americans have a lot of their net worth tied up in 401k plans that they almost forget about and the employer contributes a lot to it. They contribute a little, and it just kind of continues to grow over time. And younger generations now, I mean, Social Security seems to be less and less of a topic for them. I know people my age that the consensus is, hey, I'm not banking on having it. Whether or not you are, it seems less important to younger Americans now.
Well, even when I was coming along in the 90s and the first decade of this century, I didn't really think that Social Security was going to pay me out exactly what I was paying into it. Even back then, we were talking about its eventual insolvency. But then again, the thing about it is, if you're planning solely on Social Security for your retirement, and you don't have some money in investment somewhere, you're not going to have very much of what I would call a retirement. I mean, even people that max out on Social Security will not get the amount of money that they were used to prior to retiring.
Sure.
So you're going to have some money out there. And the best way of generating wealth in the United States, or at least in my estimation for the masses, would be to put something in the stock market, to participate in your 401k plan, 403b, or KEO, or whatever you got at your office. There is no reason not to do that, particularly if your employer really doesn't match. That's
it's free money.
Free money.
There's the best investment.
Investment you can ever possibly make, and so that's one of those situations that when I hear things about the richest or 89%, top 10, all that stuff. Well, I mean, that might be the case because it's going to be very bloated with people like Zuckerberg and Bezos and some of the other ones. But even if that is the case, that doesn't mean that the other 90% of people can't participate in the stock market and generate some wealth.
Yeah, I think it just shows the importance of how impactful stocks can be to kind of the American dream. I mean, we've talked about it with building generational wealth. Stocks are always a huge part of that. And then, people who start businesses, that's really, we've talked about it before, the best way to generate wealth and generational wealth is to start businesses, and you own a corporation, and buying stocks is how you partially own part of a corporation. So it's a no-brainer that the wealthiest Americans own a majority of the stocks. That seems kind of an obvious thing, but just I get seeing the 89% of stocks owned by the top 10% of Americans is a little shocking.
I mean, the thing about it, this whole conversation has Courtney near speechless.
Yeah.
I'm not sure if you've noticed that, Sam.
Well, and I also wonder now with apps, and kind of to your point that it's right at your fingertips. There's minimal trading cost on most platforms, or even no trading costs now. So it's made it a lot easier for people to truly spend every dollar on really investing in individual stocks.
Yeah.
So I wonder, do y'all think that that's also part of it, is just the ease of it?
Oh, without a doubt. In my estimation, I say the phrase "without a doubt" way too often. It's
this is without a doubt.
Well, without a doubt. I mean, I am the epitome of hyperbole when it comes to saying without a doubt. But the thing is, Courtney, I would agree with you 100% that that's exactly what it is, because it is so much easier now. My son was talking about Robinhood and whatnot, and I actually opened up a Robinhood account and a Coinbase account just so I can have something to talk with him about. You know, just going out there and messing around some penny stocks. I would have never done that previously, and let alone crypto. I mean, every morning I sit there and say, well, this morning I said $62,000 will buy you one Bitcoin, a virtual currency unit that you can put your virtual wallet out in the matrix. But then put a little bit of money in a Coinbase account. Now I'm buying cryptocurrencies, which is something I never thought that I would do. And I will honestly tell you that I did set up the Coinbase account truly so my son would think I was cool.
Well, did it work?
Probably not.
And that's enough out of Courtney here.
Yes.
Probably not. No, I wasn't trying to get you to think I'm cool. My son did actually think it was a little bit cool until I told him, the amount of money I put in there was $100. And so he didn't think that was terribly cool. But even so, I mean, you can teach an old dog new tricks, but they're just not going to pay a lot for it.
So, but what do you think about that stat that households now have more of their wealth in the stock market than ever before? I mean, I take this as a good thing. I don't know what y'all think.
I think it's a good thing, too, because stocks are nothing more than units of ownership in a company.
Right.
And when you're an owner of something, you're going to care about it a little bit more.
Yep.
And so by having folks actually participate in the stock market, they are participating in the U.S. economy and as owners of it. And so I think ultimately I think that's a great deal. I mean, but the thing is, folks are going to focus too much on the wealth inequalities and what have you, and that's out there. And politicians are going to hammer in on that. I mean, they're going to hammer in on that. But the thing is, some 25-year-old putting some money in their 401k plan that has $50,000, $25,000 in it. That's okay. I mean, it's okay that there's a big gap between them and Jeff Bezos. They've got 60 years to work on.
Yeah, but that's kind of the first step towards becoming that generational wealthy person, is having money in the stock market. I mean, it's hard to have generational wealth without having money in stocks.
It's hard to have generational wealth without having ownership.
Right, and that's what I was getting at, is the people that have generational wealth either have tons of money in the stock market where they own tons of different companies, pieces of them, or a lot of times it's the Bezoses, the Zuckerbergs of the world who have stock in their own companies, but they own so much of companies that it just continues to grow and continues to pass on.
Do you think that it's just a way also of reorganizing how people invest their money? Because do you think that this is truly people investing more in the more in the market than real estate? Or is it that real estate now has been bundled up into an LLC that people own shares of in the market? How has it changed over time? Is there just that much more money going around, or are people taking it out of one sector and putting it,
Well, I think for the average person, I think the apps, the Robinhoods, Coinbases, of which I've already mentioned the others, you don't need to have a massive amount of money. Even when you're buying a house, you're going to need to have tens of thousands of dollars more than likely to put down on a down payment, or you're taking out some kind of mortgage or something along those lines. However, with a lot of these trading platforms, you can open them up with as little as $100, and so that enables more Americans to go out and actually participate in the stock market. So I think that's a huge chunk of it, is the fact that we're bringing stock investing down to where just about anyone that has an inclination to can participate in some form or fashion.
And I think, there's a bit of it that's uniquely American about the infatuation with the stock market. I think you look at other countries and countries
American
around.
Dream type thing.
That's part of it. And I think it goes back to partially what we were talking about with 401k plans. I mean, I think you look at other countries, and China's been an example recently because of the boom in real estate there, because of people now being allowed to invest in real estate over the last couple decades. Mm-hmm. That's the big focus in China. In other countries, a lot of Europe still has a lot of those defined benefit plans that we were talking about. And, if you have a defined benefit plan, you're probably not as concerned with the stock market. You know kind of what you're getting out of it when you retire. Whereas in America, a lot of people focus on the stock market because they're designed to. I mean, that's what their retirement is based on, is on the stock market compared to those other countries.
Well, I mean, we've talked about this in the past, if not here on Trading Perspectives, and certainly in our offices, talking about how Americans and American societies have traditionally been more tolerant of risk compared to Western Europeans and Japanese, whatnot. We have a higher percentage of our wealth in stock market. We have a higher level of entrepreneurial activity than most other G7 countries, and that type of deal. So, so risk taking is kind of an American trait,
right.
And so that ultimately being brought up with that as being very, I'm going to say almost uniquely American. Yeah. That means people who are 20. It means my son, who is going to be 20 next month, is. He's going to be interested in the stock market. He's going to be doing this, and heck, we're bombarded with it.
Do you think that has something to do with, like, a lot of European countries? I'm thinking specifically, the government has stepped up, I guess, in more ways than not, where it's kind of created a system in which the society relies on the government because they trust that the government is going to look out for them. They trust that they're going to have set benefits, whereas, Americans haven't had that. We don't have maybe those, national health care. And I'm not trying to get into a political conversation, but I just wonder.
That's okay. We can. We'll just talk about predestination after you're done.
Right. But I just wonder if it's kind of the chicken before the egg. What actually. Is it just that Americans are the American dream and we want that independence? Or is it just honestly that people have stepped up because they couldn't rely on the government to keep their quality of life?
Listen, I think that's almost a topic of discussion for a graduate school paper. I mean, truly, it's. I would say this. the more reliant you are on someone else for your well-being, the less risk you're probably going to take.
Right.
So the more power the government has over our lives, the less risk we will take as individuals, the less we will care about buying stocks. The government's going to take care of us. Now, with that being in mind, what do we say about risk and reward in the investment industry?
Yeah.
You get paid more based. If you're willing to risk it, you should get paid more. The higher the risk that you take, the higher the reward you should be able to expect.
Or complete nothing, right? Because
Without
there's
it.
also two sides of that coin.
So the thing is, if you're in a society which has all these government benefits, communist countries, whatnot, you're taking a lot of risk out of the equation.
Mm-hmm.
And when you take risk out of the equation, you take reward out of the equation. By having the central government in the United States be as weak relative to other countries as it has historically been, Americans had to take on additional risk in order to, live, survive, thrive. And so that's probably the reason why we have seen a greater reliance on stocks as an investment choice for Americans. Is just due to the fact that how we set up our country a couple hundred years ago.
And I think connecting stocks to owning businesses is an important part of that, an important part of the discussion and what we've seen in America, especially over the last 100+ years. 200 years, that was a big part of immigration, was people coming over here, starting their own business and making it on their own. And I think that's just, stocks are a way to kind of do that.
Well, it never ceases to amaze me when I'm sitting there talking to someone or hearing someone on the television, they're talking about big bad corporations and all that stuff and saying, you don't really seem to get it. Do you have a 401k plan? Of course I do. What do you invest in? Well, I've got the S&P 500 fund or something like that. And yet you still think big bad corporations are the problem? That's
Right.
what your retirement's based on.
Yep.
Big bad corporations.
Right.
Which happen to generate a lot of wealth. For
A lot of jobs.
And for a lot of Americans.
Yeah. A lot of times the big bad corporations are the ones who are putting the money in your 401k for you.
Well, I almost said it. Almost said without a doubt, but I caught myself. But then I just said it. But in any event, kind of going back to what we originally were talking about, just the sheer size of the U.S. stock market, the amount of wealth that is in it, and the importance for Americans' retirements, gee whiz, it's awesome. It's not a problem. And I actually think it's a great thing because it means that Americans are taking risk, and if they're taking risk, we should be able to generate higher rates of return.
Yep.
And hopefully through this being more normal, right, that we can include it in some type of education for our young, that they can understand the risk and reward of investing in the market, because I don't think I ever had really a course, even when I took economy.
Courtney,
economics.
I'll be glad to come over to your house around dinner time and do a little investing 101 for your kids. I'm not sure how much they will like that unless I show up bearing Pop-Tarts.
Yes.
Something
Always
like
a win.
So, guys, thank y'all so much for listening. We always love to hear from you. Also, if you have any comments or questions, please, by all means, let us know. You can always leave us a review on the podcast outlet of your choice or drop us a line at tradingperspectives@oakworth.com. As always, if you're interested in reading more, hearing more of what we have to say or how we think, please go to oakworth.com and take a look underneath the Thought Leadership tab. Sam, Courtney, what say y'all?
That's all I got.
Yep.
That's all I've got today, too. Y'all take care.